Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, 29th day of June 2016, and we are looking at the Dow Jones Industrial Average in a second day of a very, very strong rally. Today closing up about 284 points, over 1.5% gain on the day to settle at 17,694. S&P's up almost 2%, 1.89, 2066.75, the low 2022, and the high 2067.25. So as you can see, it has closed or settled, I should say, about a point off of the high on the day. So traders, the first chart that I do want to look at on today's trending markets is a daily chart of the Dow Jones Industrial Average. We talked about the fact yesterday that there were a couple of telltale signs that we could be at a potential bottom of the market. The first one was the fact that we had actually traded below but closed at or slightly above the 38% retracement. That is 17,142. We also, though, noted that we were trading below the 200-day moving average, and that was to be absolutely construed as something that could be sentiment for further bearish selling in the market. Of course, that was alleviated completely as the market really clipped up on yesterday's trading, and you can see closing well above this 50-day moving average, and that pretty much signaled a potential rise in prices. More so, what it signals was that the Brexit vote, which had really devastated the market over 2 days of trading, that of course is this long red line here and this red line here, the consensus was that at least for the short term, we wouldn't see that much economic turmoil, and it seems as though there's a kind of a relief going on, or a deep breath, a sigh, so to speak, in which at least traders are saying that this market should continue in the upward track. Now, it had been trading, of course, in a narrow and defined range, not being able to break above these recent highs. It's had great difficulty and not been able to trade or even flirt with the record highs that we saw last year. And of course, traders, the same can be said, or information can be gleaned from the way the Standard & Poor's traded. Now, we talked about the fact that here we had the market track down to a 50% retracement, although not breaking through it, but it broke well below the 200-day moving average, and that was on the second day of the sell-off. Yesterday, of course, we had the market track and close above it, and today, this tremendous rise in the S&P up about 38 points, we are within striking distance of that 50-day moving average. And of course, once we're above the 50-day moving average, as long as we're trading and tracking above that, we can truly say that we could possibly be back into somewhat of a bullish stance. So traders, there's no doubt that one of the markets that really influenced the equities today was crude oil. You can see crude oil $49.50, up 3.5%, up $1.65 a barrel. Second day of dramatic rise. You can see that right here. And then, of course, this chart has the crude oil market on the top and the S&P on the bottom. And we talked about the fact that at times there's been that one-to-one correlation, that exact correlation in which we see equities move higher, we see oil move higher, and typically it is oil that's leading the way. These two down days, of course, pretty much identical. And then, of course, this reversal that we're seeing today. So that is absolutely something worth noting. And lastly, traders, we are looking at the dollar index, and there's no doubt we had that tremendous spike to the upside, that safe haven play after the Brexit vote was passed. That's these 2 days here. And of course, just as we've seen equities really moving higher over the last couple of days, we have seen the dollar come under pressure, moving lower. Today down by about 0.5% at 95.70. And traders, although I said last, I do want to take a quick look at the British pound. That is also trading higher for the second day in a row. The kind of devastation that this currency really exhibited on the day following the vote is extreme. I don't think we've ever seen this kind of a move, except maybe when the Swiss franc made a basic shift in their currency status or the way that that currency relates to other currencies. But this is a tremendous move, and we have had a slight recovery. We do have a gap here, although it's not a true gap because you do have the lows that go in here. But this gap would get filled, I think, even if the market would continue lower. I don't believe that we are truly out of the water. As I said yesterday, I think that the jury is still out, but I do think at this point they are close to the conclusion of their deliberation. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.